Welcome to Sweatpants to Suits, the podcast where we dive into the journeys of career professionals, uncovering the secrets to transforming from sweatpants mode to suits success. Join us as we explore personal stories, insights, and strategies for cultivating a growth mindset and achieving your vision of success. I'm your host, Jerry. Are you ready to up your game? Let's dive in. Himansu Pradhan wants to educate you about the world of cryptocurrency. He is an experienced software engineer and an investor who is very passionate about Bitcoin, Ethereum, and AI development in the blockchain space. In this episode, he wants to share with us what cryptocurrency is and his insights into the future. Himansu, is definitely a great day to have you as our guest. You're very knowledgeable into this world of cryptocurrency. Can you share with us what the blockchain is and why is it tied to cryptocurrencies?
Thank you, Jen, for this platform. I hope I share my insights out here. So let's start. What is blockchain is all about, and let's understand the bit of not true technicals, but bit of overall understanding about blockchain. Okay. So how the blockchain has evolved is, let's have a go back to the previous history, just immediate previous history. Back in 2008, there happened to be a huge financial crisis in the globe, which actually changed the financial demographic thought process of the world. There were a lot of scams, there were a lot of frauds happening out there. So what happened eventually was, there is some guy called Satoshi Nakamoto, okay, the most anonymous and the most wanted man in the earth. Okay, so he built this beautiful technology called Bitcoin. If you go out there, read the Bitcoin white paper. The white paper itself, every coin has a white paper. They show out there what's the technology they work for, what they have done, how their roadmap is, how the token supply is, how everything is happening. Everything is there in the white paper. Now, if you go out there and look into the white papers, the blockchain first concept was derived. You see in this cryptocurrency world, right from 2008, 9 to until now, so far, the journey of 15 years, every token or every cryptocurrency has been brought up, keeping in mind how Bitcoin has been. Now, the blockchain concept came out in a very famous way from Bitcoin. Now, what it is exactly blockchain is all about? It's a distributed ledger technology that securely records your transactions. Now, what does that mean? Is when we say distributed ledger, there is no one man working for it. There are anonymously people working for it. They are validating your transactions. They're validating your blocks. Now, what blockchain is all about is, it's all about blocks and chain. Blocks of transactions connected with a chain is called as blockchain. Now, what is this blockchain in terms of, let's understand a bit of, technical aspect of. There is something in data structures in computer science that is called as queue, linked list, queue, DQ, and all those stuff, where we connect to each of the nodes using the addresses. Right. So similarly, blockchain is all about that. Now, this is a fair understanding about what it is, what blockchain is all about. Now, let's get a bit deeper now. What happens here is, it's a secured record transactions across multiple computer nodes. As I mentioned, no one man is working on it. In a way that is transparent. It is immutable. That means you can change the transactions. Once it is locked, it is locked. And the timestamp of each block is also available for your transactions. So there can't be any fraud. Okay. Now, cryptocurrencies like Bitcoin or any digital virtual currencies that we use today has a various use case. I mean, right from its security, right from its operations independently. Okay. Without any central authority. Now, let's get back to it. What is central authority? The banks, today's banks that they work, those are central authority. It's a centralized systems. Why I say centralized systems? They have the complete authenticity to keep a track of all your transactions, to keep a track of your every assets that you have, to keep a track of your tax systems, to keep a track of your transactions to whom you are sending and all. Everything is in a centralized way. That means someone is looking into it. Now, cryptocurrencies have a different way of working. They are decentralized. When I say decentralized, it means that nobody is there to track you. Let's say I want to send you some bitcoins. I will only need your address, your Bitcoin address. That's it. I don't need any authentication further. I have to send you the asset. You know, I know. There is no middleman out there. That's how the decentralized exchange means. Okay. Now, uh, that's how things goes. In a normal way. Now, this cryptocurrencies, how they have evolved in terms of blockchain space. Let's understand this. What has happened is now the cryptocurrencies have evolved a lot. They are very matured. They have a lot of use cases around. I mean, someone is building security protocol, someone is building data integration hub, someone is building infrastructure, someone is building gamifies, someone is building metaverse, someone is building DeFi, that is decentralized financial exchange. Someone is building, AI tokens, and that's how things have evolved. There are a lot of ecosystem tokens as well, like Ethereum, Solana, you have AVAX, there are other as well. So this is how the cryptocurrencies has evolved as well. Now, why there is a lot of hype about the Bitcoin is it's because I would, based on your question that you have asked, that is your blockchain and cryptocurrencies. Now, Bitcoin is leading this cryptocurrencies. Wherever Bitcoin goes, the rest of the cryptocurrencies, if they have a proper real world working project and they have a good dev community out there and they have a good mass to hold this token, then it has definitely to go. But they have to be having a use case like Ethereum, Solana. These are the best of the ecosystems right now. Yeah, that's how things go. Thank you.
Just to recap, so blockchain is basically people are using these computer to solve a super complicated math model that tracks the transactions of bitcoins. So blocks,
not only the bitcoins, it can
Yeah.
be anything. It can be any cryptocurrencies that you transact. It can be
Oh,
Doge, it can be XRP, it can be BNB, it can be anything.
so when you mine for a Bitcoin, you can choose which cryptocurrency you're going to solve for, right? It can be Bitcoin, it could be Ethereum, it could be Dogecoins.
If we mine, every coin has a different mining way. Bitcoin
Oh.
mining in 2009, it was very easy. You could have done it in your laptop or a phone, but the mining eventually has gone. The complexity of its mining has increased like leaps and bounds. Okay. Now, back in 2017, when I tried to mine Bitcoin using my laptop was blown up. I tried to then I tried to fix it up and I tried to mine Ethereum. It was not that great as well. Somehow Ethereum was getting mined, but Bitcoin literally blew my laptop. It made me horrible thinking about it because the hash rate complexity to validate those blocks itself is very 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 high. Then there were the Bitcoin miners were working in some nowadays they're working on some THZ, but previously it was not working in THZs. Okay. Now, why the mining complexity has increased is the way that it has been programmed, that every Bitcoin having it has the mining complexity will be increased in such a way that the mining will be reduced to half. When Bitcoin was initially coming, the miners were getting 25 for mining. After the first halving, it went to 12.5. After the second halving, it went to 6.25. After this halving, it will reduce to half of it. Now the complexity increases. When the complexity increases, the mining process itself getting tough, right? The miners has to do a lot of efforts back in after, and that itself brings one of the fundamentals for the price action in Bitcoin, because it itself is the law of demand and supply, that is scarcity, and any asset that has a scarcity, its price has to go up. Yeah.
So just out of curiosity, can you automate the mining with the use of AI, where is exactly AI being used for the blockchain?
Cool, fair enough. Mining rigs. Uh, uh, you can afford to buy mining rigs. Okay, you just need to align to the norms of your country, and if they allow, you can go for mining rigs.
Mining
And
rig.
a lot of countries they do for go for mining rigs. Recently, US, I have shared my data feed in LinkedIn, where I have shared the statistics about the miners, how they have their revenue has increased in the last 6 months. And Biden administration is going after them for the imposition of 30% taxes, which happened in 2018 by China as well on the miners. But miners will eventually find a way out for it. No need to worry about, because Bitcoin is here to stay, and someone big shot will be coming to backing them up. Don't want to reveal the names, but yeah, but they're coming to back them up. Now you asked that how AI is being used for blockchain
Yeah,
crypto.
for the blockchain.
Right?
Yeah.
Yeah. So I'll say then, before coming to this, I'll say you how it happened, how these things build up. Everything has a build up, right? The whole world works in a narrative, right? So back in 2 to 3 years back, okay, 2020, 2021, or if I remember, so there used to happen a lot of blockchain AI conferences in Dubai, in Europe, in USA, in UK, across the globe. It had even in India as well. Now the narrative was set that it is all about AI. Why? Because people were building a lot of GPUs, TPUs, TensorFlows were deep learning evolved, AI, Gen AI. A lot of things evolved in AI. In last 5 years or so, AI has gone lips and bounds. Okay. Now in these conferences, the narrative was set that it is all about AI for this upcoming decade or upcoming century. So, so all we had to do now, every time whenever a narrative is set, now there are a lot of technologies that has the impact of this AI, right? Fair enough. So, blockchain is eventually a part of it. How can we miss the blockchain without AI, right? So, all we had to do was we had to build up projects around the ecosystems, like Ethereum, yeah, like Solana, a lot of ecosystems there are, and we had to build AI tokens which has the real world use cases based on these ecosystems, right? Because see, at the end of the day, you can't. I mean, it's all about supporting the ecosystems, because they have a huge dev community, and they're working bang on about it, and they have their very secure protocols. The tokenomics will be very secure. Yeah. So now what happened was the AI came into the blockchain, right? The first thing was smart contracts. Okay. Now, AI can be used to automate the execution and enforcement of smart contracts. Okay. By analyzing your data, by monitoring conditions, and triggering actions based on your predefined criteria. Now, AI is sometimes, yeah, not sometimes, AI is always about predefined training data sets, right? How the previous data you have, how they have behaved, how the future would happen, right? So this was the implementation in smart contracts. We also implemented AI in fraud detection and prevention. How? By analyzing the blockchain data. Okay. Now, what will happen is if there is any suspicious or fraudulent activity happening, now all we had to do is like money laundering or any suspective activity that is happening, we can prevent those measures. Now, how it will happen? We have to go to the blocks. We have to fill the data, fetch the data, and our AI model will take those data and will validate. Okay, this is a valid transaction or not, right? Next, the identity management. Now, what data exactly is this? Biometric scanners, your iris scanners, your behavioral patterns, various verification processes, so that we go for risk mitigation. That is eventually security and reducing fraud, because it's all about finance has this major loophole aspect all these years where fraud and scams and all the security loopholes has been around. I don't say that blockchain is very secure, but any disruptive technology that comes eventually has to find a way out, and somehow people have to work around. They have to grow up with it, right? Now we have got predictive analytics in AI, right? where we prescribe or we predict things like, okay, this is going to happen, that going to happen. This has also got the role in blockchain as well. Okay. Now we have something called privacy and confidentiality, one of the other important aspects that also has been covered by this time by AI with blockchain. Now, if you see um, uh, the recent world developments right now, right? The recent AI tokens that has come up. This time the war, and I would say not the war. This time the the competition is happening between Solana ecosystem and the Ethereum ecosystem in terms of AI. So now there are a few projects which are already boomed in last 5 to 6 months. They have gone some 10x, 15x. Okay, I had one of them, and they have the institutions are coming with them. They are doing a lot of hackathons. Um, a lot of big organizations like Robot Boss, Duncan from I think from Netherlands, or I think from he's from some. It's one of the largest, biggest financial telecoms. I think. Correct me if I'm wrong.
Oh,
It
speaking of
has come
instant,
across one of the AI tokens,
oh,
and and there is one more token which is taking the lips and bounds. A lot of big articles from US have already published about its potential of 100x. It's a real world use case. It's sitting idle. It's about to boom within no time. It's
oh yeah.
built on Ethereum network.
I
Yeah.
think this is a perfect chance to ask that question. Why are large banks starting to endorse cryptos? What is a crypto ETF?
Okay. Let's understand how the financial system works. Right. It's all about making money. That's it. You make money, and you keep making money. That's it. Nothing else. Now, the first thing is banks banks have grown in such a way that they have reached at a point where if they don't align with technological advances, then they might miss the opportunity cost, or something called as the change in the dynamics. Now, those financial institutions which are even not actively getting involved into this, they will eventually come into this. Every financial institution is bringing cryptocurrencies into their balance sheet. If they pull only 1% of their portfolio into the crypto, Bitcoin in itself will topple gold within no time, which for sure. Okay. Now let's understand why they are coming out here. So why they are coming is it's the growing demand. Anything that has a demand, the big boys, the big financial guys, they are after it. They want to wash their hands off the money. They don't want to let it go. That's one of the aspects. Now, how they offer this? They have to offer this by trading, by custody, by investment products. Now, how they will bring this up? By bringing some innovations into it, right? How they will bring the innovations into it. So, what happened is there comes the picture of ETF. Now, what is ETF? It is called as exchange traded fund. Now, what happens is we do not need to buy assets physically or something. Now, what will happen is if you have a ETF, you can have an investment fund to the banks, and you can buy out the as a stock, and you can keep it as an asset. A stock in itself is an asset, right? So what happens here is once you go for ETF, the most important factor is what I have seen since 2004 after gold ETF happened. The institutional investors, they sit with that base bag. They ensure that this is the thing which is going to the next level, right? So that is the reason they go for ETFs. What happens is mostly, big the big investors, they don't like to lose money actually. No, they don't. They have a lot of money, but they don't understand the underlying technology. I don't say that everyone does that, but they have money, but they don't understand what. So what will happen is if we do a ETF, that's the proof of concept, not a proof of concept. It's a proof of work that the world has accepted it as an asset, right? It's as simple as that. Why only Bitcoin was accepted? Why nobody else was accepted? Now let's have a understanding about it. Why only the first thing? I mean, the SEC chairman currently, who is actually responsible for ETF. I mean, hats off to her. She was the person who kept on saying for since 2018-19. She was one of the biggest advocates of Bitcoin ETF, and why she was behind it. See, Bitcoin is in itself, the token supply is very limited. The second aspect is a lot of Bitcoin has been lost. A lot of Bitcoin has been lost. Bitcoin mining capacity is increasing in such a way that the complexity is at its top level right now. Okay. Now, now there is something called in economics law of demand supply, right? Anything which has a scarcity, the demand will boom, right? So now what will happen eventually is, so they will um, they will take this Bitcoin to the next level now. How they will do it? Now they have done the ETF, right? The big boys, they have already the Bitcoins in loaded, like BlackRock, your Grayscale. I mean, big guys, Michael Saylor. They have. They have their portfolios balanced in millions or billions in Bitcoins, because that is the next financial transactions that will gonna happen with Bitcoin.
I
People
have a
will
question.
accept Bitcoin through ETFs. They will
I
not go and buy ETFs.
Could you help us explain if the big guys, the large institutions, are packed in bitcoins? Why is it so volatile?
Yeah. So what has happened is, crypto space is in very limited people around it. Okay. Now, when I say very limited people, I mean, if I say about my country in India, we are only 1% or 2% of the people who are understanding cryptocurrency, and we are 140 crore people. So you can understand that the the community here out is very restricted. A lot of big bag holders are sitting out there. Now the volatility is obviously it's going to increase because it's not in a distributed way equally. So big boys will be dumping, pumping, and all. So once it is eventually distributed across the community space where people understand it. Now this is the reason the ETF is coming to balance this. So the volatility will not happen, right? Now what is happening is there are retailers, there are whales, there are sharks. So what eventually happens is not being much being handled right now by institutional investors. But once this ETFs and all everything comes into in a proper aligned way, this volatility is going to decrease. It's going to stable down. Yes, there will always be in a financial market, there will be a spike and all, but and you understand one thing is this is all about token supply and tokenomics. Yeah. And if you know it's just very speculative market. Cryptocurrency is a very speculative market, right? You understand the projects, you see at the outlying um factors. Now you see, in all these years, a lot of projects went to top 10 and they came out of top 10. They're nowhere in top 10 in the coin market cap. Why? Because the project faded away. Now it's a very speculative market. You see the project, you understand the project. Okay, this is the tokenomic supply. This is their work, proof of work that they're doing, and this is what they're bringing up to the table. This is their community. How many exchanges they are being listed. This is all about a speculative market. Who is the big bag holder behind it? So that's the reason the volatility happens.
If it's a speculative market, right? Why is it sometimes that people just see the demand so much, so worth much that the price of Bitcoin goes up like tens and thousands of dollars, and sometimes when people don't like it, they just drop like tens and thousands of dollars as well. It could work
Yeah,
both ways, right? Yeah.
yeah, that's fair enough. Now what happens here is The every time the bull run happens to be during the halving period of Bitcoin, because every price action I say there is a fundamental aspect and a technical aspect. Okay. Now, Bitcoin does not itself rise the price. Now, what has happened is eventually, first thing is the people who have the Bitcoin, they have the large bag shareholders. First thing, first place. The second thing is the mining complexity has increased. That itself is pushing the prices as well. The third thing is it's the hype. Anything that has a hype, the price has to go up, right? Now, retailer mindset is something like, they say, okay, it's going up, going up, going up. Let's buy, let's buy, let's buy. And the big boys, they will say, okay, come up, buying, 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 and then dump. We go down, we buy again, we suck your liquidity. You are out of the market. Tata, bye bye. See you again. That's how the things goes. So you have to understand, if you want to build of your financial assets in cryptocurrencies, you have to be having a good fundamental analysis and a technical analysis, or else it takes minutes to blow up your account. I mean, in last 7 days, billions and billions, they are wrecked. They are wrecked. They are gone out of the market. It's as simple as that. Now, as cryptocurrencies grows, this will eventually settle down. Yes, there will be price actions. There will be liquidations. It happens in native stock markets as well. Couple of days back, or I think in this last week, in the New York Stock Exchange, it also had a bit of crash. In our Indian stock exchange, also a couple of days, or in this last week, they had a crash as well. So people are losing money at the end of the day because they don't understand what they are doing with the money. And cryptocurrency is a very high volatile market. If you don't understand the game, you are out of the market. Be for sure.
Okay, you seem to be a very prudent investor in the crypto space. What has worked for you? Do you see like a certain economic condition that work better than certain than other times?
Yeah, I am a big, big bull for the cryptocurrencies. Okay, I have been seeing this since 2017, when even I didn't know what exactly cryptocurrency was. I didn't even know what blockchain was. I just it has a very interesting story. One good weekend in 2017, my friend named Anuj Dubey, we are good friends from BTech, from our good old education days. He told me that you're wasting your time. Let's go out there and see something what is there here in Bangalore. So we went out there and we saw one of the meetups happening here. And people from Hong Kong, people from, I think, from Japan, from China, people from, I believe, US as well. It was not a big meetup. It was some 10 to 15 people meetup. Okay. And they were talking, we had a free food, free meal. They were giving, I mean, they were spending money like, I can't explain even. I mean, 2017, I'm saying. Okay. Now, we both looked at each other and started saying, yeah, these guys are younger than us, or maybe in our age, and they are spending money like they don't bother about. What is it all about? Now, they explained that we bought Bitcoin in some cents, it has gone some dollars. They bought some Ethereum in some cents, it has in dollars. And they explained, okay, this is be the next big thing. They will change, but they didn't make us understand, convince us technically why we want to get into cryptocurrencies. Okay. Because they were only making money. That's it. They didn't explain us what exactly the vision was all about. Now we came back after 1 week. I started, me and my friends, we started buying Bitcoin in Bittrex. And I bought my first Bitcoin at $2,500. My first Ethereum was somewhere $10 to $12 short. And what happened was, as I was getting into this, it was really making money. Now, once you make money, you have to understand one thing is, it's just not once. It's not a jackpot. Playing jackpot is different. Playing with a asset is very different. Now, we both are techies. We both are programmers. He's a big programmer. I'm a normal programmer. He's a big programmer than me. And we started seeing what it is exactly. Now, when we went into the underlying architecture of Ethereum, it was something written that they had built a product with Solidity. Now, what is Solidity? It was correlation with the C++. Okay. Now, what that's how the things goes. Now, that built us again. Okay, this is all about technology space. They're building some smart contracts. They're making changing the world. They're bringing security. They are trying to ensure there is no there is no centralized thing. There is decentralization. These are the things which came into our mind once we got into it. Now, this is it. I mean, you are giving people the freedom to have their own money. It's as simple as that. People have all their rights, all their freedoms to keep a privacy of their accounts.
You
It
know
should
what?
not be
That's a
tracked by
great question.
someone else. Yeah.
That's a great question too. Do you feel like since it's a decentralized system, there's no transaction history? Do you think that it is a type of financial instrument used by people who commit crimes? Do you think that is a
Yeah.
good way for them?
Yeah. That can be one of the aspects. I am a voracious advocate of it that yes, this can happen. The terrorism activity, the fraud activity, the scam activity, it can still happen here. Not still happen here. It happens here, but I would say one thing is every technology has its own loopholes, and eventually we will find a way out to fix them up. Now, the short-term goals I would say is that the governments are advocating for the regulations. Why they are advocating for the regulations? They support the underlying blockchain layer. They understand the cryptography. They understand the cryptocurrency, but they are against of trading it. And they're not against trading it. They're against allowing it as a main way, because there is this, as you're mentioning, about terrorism activity and all cross-border trespass activity, which eventually brings a threats, which eventually poses a threat to the globe. So now the regulations has to come. It's going on. Our honorable Finance Minister Nirmala Sitharaman, just a couple of days back, she had an interview again where she was asked about this, about the bull run and all, the recent bull run where the Bitcoin has made a run. And she was asked, what's your prospect about it? She clearly mentioned that our narrative hasn't changed yet. But there is a bullish news out here that she has again mentioned clearly that because India was leading the presidency of G20 last year, right? So they have written this letter and they have tried to say to the G20 that let's bring up this thing to the table where we can have a common, prospect about how to do regulatory things and all. Now, the best part is the world is being run by our big brother, US. I call US as big brother. Wherever there is any crisis or something, US is there. Oh, we are here. We are here to save you. We are here to save the earth. We are Avengers, right? So that's how things goes. So now what US has done, the great thing is they have accepted the ETF. Okay. Now, all these years, I'll say you one thing. In 2017, the bull run, 2017-18, the bull run was run by, the show was run by China. Right, and all the Chinese ecosystem coins, they blasted like anything. I didn't make many money because I didn't understand what it is all about. I didn't want to push my bucks into something which I don't know. Eventually, they went out of the coin market cap and they are all zeros now. Okay, people have got it because they didn't understand the projects and all. Now China came hard on their, right, on their both the miners and the projects. They sealed the ban and everything, and a lot of things happened. Then in 2020, 2021, the whole world is involved in the bull run, right? So when Bitcoin started its rally from 20K to, it came to 69, okay? And then it went back. So when it came to 69 and all, the whole world was involved in it, the last bull run. But this bull run in specific, US is running the show. US and Europe are running the show, right? Asia is not getting that much of traction as of now. Maybe in later times, very soon, because this bull run is a long bull run. Right now, Bitcoin is having a mid-cycle correction fundamentally, which eventually will take it right to 100K from here. And but all I will say is the security aspects and the compliances of it. The world is working on it. they are working on it. And coming to the technological aspect of it, a lot of security features measurements has been taken, right? If you understand one thing, if a lot of cross border activity or these things would have happened, right, then there would have been a war by now. People are not interested to use this for this. Yes, there are criminal activities happening that can be stopped, that can be regulated, and we can do that. We can stop them. The regulations are happening now. Our country, in our country, in my India, what has happened is they have kept a TDS, tax deduction system. Now, now what happens is every transaction that I do, let's say I bought Bitcoin, I sold off, I came back, I bought Ethereum, I sold off. So every time I do this transaction, there is something called TDS. Why they take TDS is to have a proof that what I'm doing with it. Am I sending it or somewhere not? So that is the reason they're ensuring the fraudulent activity should not happen as of now. But it has to eventually evolve. People will come. We are just, you see, 2009 Bitcoin came up, right? Until 2012, 2014, nobody, very handful people know it. From 2017, actually, the crypto came into the world's prospect. People came into know when in 2017. It's just 7 years. It's just 7 years.
I have a question I want to ask you. So I see yesterday I saw an ad for crypto credit card. That was something very interesting.
Yeah, crypto lending has been there.
It is, right? Yeah. But when you use crypto to pay for something, right? The government doesn't see it, right? But then the credit card the company doesn't see it, right? But if you use a credit card, right, you're building up credit history, which is good for you when you're applying for a mortgage, right? But what do you think? But why does it? What are the benefits of masking your transactions by paying with crypto?
Okay, fair. Crypto transactions. It made a. There was in 2017. I saw someone tweeting somewhere that he had bought a pizza with 10,000 bitcoins, and he was regretting about it. Right. So crypto transactions were there. People were buying assets. Now there is no masking and all. Though no one wants to hide. The fact is, let's understand one thing. Why crypto? Why crypto? Why crypto? Why people want to do lending? It's one of the new financial systems that is coming up. Now in fiat also previously there was no this lending and all. This lending activity, this increased in the fiat system in last few years, where the retail got the benefit out of it. Right? The cryptocurrencies has the same way. Someone can lend it. Right? Now I'll say you why cryptocurrencies will replace the fiat system. I would not say as of now, not completely, but yes, some or the other day it is going to happen. Why? I bought my Bitcoin in $2,500 in 2017. Now, with respect to $1, the value of it was only 68 rupees. Now it's running 86 rupees. So there has been the devaluation of my money. Right? And now who is buying the asset for $2,500? In INR, it is much bigger because there has been the devaluation of it. The same has happened with US dollar as well, right? That is the reason. So the fiats will be replaced with cryptocurrency. At the end of the day, cryptos are going to be having all those aspects, what is happening in fiat. It's not about only the lending. It's all the financial aspects that is being run in the fiat will be implemented in cryptos. Okay. It's as simple as that. The world is having a paradigm shift. Okay. We need to understand every 100 years it happens. In 1924, it happened. It is 2024. It's 100 years. The world has to move on. The finance industry will just reinvent itself, and they will try to do the same thing which we're doing with the fiat in crypto. That's the only replica of it, but in a reinvented, much organized, much better opportunities, implementation of technology and all. This is going to come. This is coming already. This is there. This is just a mass adoption is to be happening. It has to be mainstreamed.
Interesting. I like that take on it. And for a beginner who is wants to tap into the world of cryptocurrency, do you have any tips for them?
Yeah, absolutely. Um, there are various things to do. Okay. You can buy tokens. You can stake them. You can yield. You stake them. It brings you much more tokens into your wallets. That's one aspect of it. In a bull run, you can trade. You can trade, but you have to understand, or else you'll blow up your account. Right now, when you are becoming a crypto investor, you have to understand which projects you are getting into it. Now, by default, everyone knows Bitcoin, 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 Ethereum, 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 Solana, 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 because these are the established cryptocurrencies, right? But what about others? There are thousands and thousands of tokens out there. You need to understand that dev community. You need to understand their community. You need to understand their projects. You need to understand their tokenomics. And you need to understand, keeping in mind the narrative of this. Every bull run has a narrative. Okay. Now, 2018, the narrative was all about Chinese coins. 2021 was all about metaverse, Sand, Mana, Axis, all the gamings. Axis had a mind-blowing run, man. It went right in front of me from $1 to $269. I just kept looking at it. I could not do anything. Yeah. Now it's very volatile. I don't want to play with it. So I saw that the previous bull run was metaverse. Now this bull run is about AI, deep in RWs, gamifies, DeFi's. But most narrative goes to AI. When I say most narrative goes to AI, maximum funds will be pushed into it. Okay. Now the projects which has the best value in it will be getting the maximum gains out of it. Now I will say is, don't hold any tokens. Or you can hold Ethereum, you can hold Bitcoin. I would say always hold Bitcoin and Ethereum. It's okay. It's asset. Bitcoin is, I would say, you hold it, but don't hold alts, because you just trade it, because at the end of the day they are bubbles. They will go zero at some point of time, or maybe they would be having a very diminishing value of 70%, 80%, 90%, and you'll just remain back with a bag holder of it and nothing else. Right. So I would say, don't keep your bag full with alts. Trade it, leave them, move on, keep buying something else. If it is not there, move out, buy. Don't hold it. But I'm a big Bitcoin maximalist. I don't understand anything else. I would always say that keep buying Bitcoins. Every month of your salary, you just buy something, some satoshis, because it's not about Bitcoin anymore. It's about satoshis, the minutest value of Bitcoin. Right. So that is the game now. How many more satoshis you accumulate, that decides the next future. Right. I am a Bitcoin maximalist. I reiterate again. I will never say that you go for this alts. Yes, there is narrative. You can buy. You can go for AI narrative altcoins. You can go for RWA, or you can go for DPIN, or you can go for DeFi. You can go for gamified tokens. But trade them. Don't hold them. That is not good. But BTC, I would say hold them. That's the future.
I think that's a wonderful key takeaway. Buy them, but don't hold them for too long. Otherwise, you don't know what certain situation can happen.
Make alts as your girlfriend, not wives.
Not wives. Great analogy. Thank you so much, Himansu,
Thank you
for your insightfulness on the world of cryptocurrency. I think the audience can learn a lot from you. Thank you so much for your time today. It is an awesome time talking with you.
Thank you, Jay.